Okay. Hi, hello, namaste, adab. A very good morning, ma. This is the class 3 of financial accounting. So we are in a discussion of the basics. So in the previous class, we have discussed the special transactions like outstanding expenses, prepaid expenses, income receivable, and income received in advance. So once directly we are going to see the journal entries and we are going to discuss the types of accounts. Already one type of account we have completed. Which type of account we have completed, ma? Debtor account. So here, what is the entry for the outstanding expenses, ma? Here, to conclude expenditure account debited to outstanding expenditure account. Expenditure, why we have debited? Because it is showing a debit balance. Always the expenditure is increases, so we have debited. When coming to the outstanding expenses, it is a liability having a credit balance. So liability created means increases, we have credited. So what is the entry? Expenditure account debited to outstanding expenses account. Let's come into the prepaid expenses. Prepaid means already payment happened or not happened, amma? Happened. But we should not write expenditure account debited to cash. We have to write the prepaid expenses account debited to cash account. Next, income receivable. What is the meaning of income receivable, ma? Income related to current year, but we have not received in the current year, we are going to receive in the next year. So here, if we received means what is the entry? Bank account debited to income account. So here we have not received, that is the reason income receivable account debited to income account. Next one, coming to the income received in advance. What is the meaning of income received in advance, ma? Income not related to current year, we have received during the current year. We have taken example of our course itself in order to understand. So what is the entry, ma? Already we have received the money. So cash account debited to income received in advance account. So next we have seen the types of accounts. When coming to the type of account, first type of account is called as debtor account. So it is an asset. Asset will show which balance, ma? Debit balance. If the debit balance increases, we have to do the debit. Decreases means credit. We have seen already. Let's come into the opening balance and the closing balance. For the asset having which balance, ma? Debit balance. For debit balance, opening balance will be on the debit side and closing balance will be on the credit side. And we have seen what are the transactions will come into the picture, ma? Credit sales, collection from debtors, discount allowed, allowances. So what is the meaning of allowances means? For example, you have seen this is a business and who is the debtor, ma? Flashman. So we have supplied the goods. Imagine 100 items. How many items we have supplied, ma? 100 items. Out of 100 items, 30 items are having a defective. 30 items are having what, ma? Defective. Out of the 30 items, 15 items what we are doing, ma? We are accepting for the return purpose. And 15 items we are doing that, we are not accepting the return, but we are reducing the cost. Okay, sales returns means directly we are going to receive the goods from the debtor as a defective item. What is the meaning of allowances, ma? Allowances means, for example, one item cost is equal to 100, na? We are going to reduce 70 rupees of cost. Ultimately, for how many rupees we are going to sell that particular good, ma? 30. So here allowances means how much? 70 rupees. So that 70 rupees we are going to reduce even though we are not receiving the good back. It is called as allowances. So same discount, sales returns and the allowances are similar, as somewhat there is a difference, somewhat there is a difference, you can understand. And we have seen that account, how we have prepared the account, ma? Opening balance and the closing balance. Generally, what is the balancing figure of this account? Closing balance will be the balancing figure of this particular account. So due to the sales, debtor balance will be increases. That is the reason what we are doing debit, because it is an asset or liability. It is an asset. And due to the sales returns, debtor value will be decreases. Due to the bad debts also, debtor value will be decreases. So collection from debtors. And next, bills receivable. So what is the meaning of bills receivable? Bills receivable means the debtor will be converted into a bills receivable. At that point of time, debtor value will be decreases, bills receivable value will be increases. Can you say the entry, ma? Bills receivable account debited to debtor account. Okay, na? So even though you are going to get clear picture in the bills of exchange chapter. And next, discount allowed also. What we are going to do? Debtor balance will be decreases, so that we are doing what ma? Credit side. And we can write one extra point. What? By allowances also. Okay now. And next, what is the meaning of this one? If the bills receivable dishonor means, again debtor balance will be increases, bills receivable value will be decreases. Okay now, that is the reason what we are doing ma? We are recording on the debit side. So like that also you can remember, or we have gone through all the entries and we have prepared which type of account ma? Debtor account. Once again, is a very important. And next, in the today's class, we are directly going to discuss the creditor account. And we have discussed one of the main important transaction. What is the important transaction ma? Bad debts recovered. What is the meaning of bad debts recovered here? So, first debtor is converted into the bad debt. Now, bad debt is converting into the money. Okay na? So, bad debt value will be increases or decreases ma? Decreases. So previously it is increases, now it is decreases, and money will be increases. What is the entry ma? Cash account debited to bad debts we should not write, bad debts recovered account we have to write. That's all. So this is the overall picture. So next, put the heading creditor account. Just a second more. Sir, these are not the free classes. For demo purpose, we are we're coming for the live for up to 10 classes. That's all. Okay now. All the basics will be covered in these 10 days classes. Okay now. Okay guys. So what is the second account we are going to discuss ma? Creditor account. Okay guys. So creditor, asset or liability amma? Creditor is a liability. So which balance will be? Liability is a credit balance. Okay. If the credit balance increases, what we need to do? Credit. So decreases means we need to do opposite. So decreases means we need to do the debit. Already we know. So now let us see what other transactions are coming to the picture. So first one, as usual, opening balance will be there or will not be there? Will be there because the liabilities are shown in the balance sheet. If any item is available in the balance sheet means they are going to have the opening balance and closing balance. So the next item is credit purchase or credit sales amma? Credit purchases. So next one, purchase returns. So next one, payment to creditors. So discount received. So next one, closing balance. Here there will not be a concept of bad debts. Why sir? We are the good persons. Okay now, because in the previous situation, who will make the default ma? Debtor will make the default na. That is the reason they are writing the bad debts. But in this situation, who need to pay? We need to pay to the creditor. So we are always good persons. That is the reason there is no concept of defaulting of payment. So that is the reason there is no bad debts like that. So these are the points we have to understand. And next there is a concept of bills payable here. And dishonor of a bills payable. These are the items. So now let me say ma, opening balance will be on the which side ma? This particular account is showing which balance? Debit credit balance. So opening balance will be on the which side? Credit side. Closing balance will be on the which side ma? Debit side. So it is on the credit side and closing balance on the debit side. These are the basic rules already we are going to discuss. So let me take an example and let me clear all these transactions. So we can write the journal entries. After that we can create the account. We can complete. Okay. We are going to take nowadays this fellow is trending after the Raja Sab's movie. We want a company. So anyway, we have to think from whose point of view ma? We have to think from the business point of view. So this is a business and this fellow is a creditor. Okay na? So what we are going to do ma? In the first transaction, we are going to purchase the goods. So credit purchase or cash purchase ma? So credit purchase of rupees 1 lakh. Credit purchase of rupees 1 lakh. So now in this situation, just now the liability created. Previously we are having any creditor balance. Just now the liability is created. That is the reason here the creditor value will be increases. This is the transaction number 1. Try to understand when will be the creditor value will be increases and when at the which point the creditor value will be decreases. We have to understand. After that, what we are going to do ma? So if we are having any defective items, so we are going to return back to the creditor. What is the meaning of this one? Purchase returns. So in the case of purchase returns of rupees 10,000 ma. So now initially we are having, what is the amount of liability we are having ma? 1 lakh. We need to pay to the creditor 1 lakh. Now we have returned 10,000 worth of goods to the creditor. What is our liability? 90,000. That means from 1 lakh we have to reduce the 10,000, add back the 10,000 amma. Reduce. Now it will become how much? 90,000. So for this reason the creditor value will be increases or decreases amma? The creditor value will be decreases. So this is transaction number 2. Okay now. Afterwards, what we are going to see ma? We are going to pay the amount, we are going to default, we are going to pay the amount because we are the good persons now. So that is the reason we are paying amount to the creditor. So how much we need to pay? So 90,000. Out of 90,000, we are going to pay 85,000. So payment to creditor of rupees 85,000. So this is the transaction number 3. Now also our liability value increasing or decreasing amma? Decreasing. So because of this reason creditor value again increases or decreases? Decreases. Now can you say the balance ma? So initially we are having 1 lakh. From the purchase returns the value decreases by how much ma? 10,000. The value become 90,000. Out of 90,000, So we have paid how much ma? 85,000. The balance 5,000 we are having. Yes or no? So this 5,000 the creditor is giving a discount. That means no need to pay na, we need to pay na ma. No need to pay. So even though you are not going to pay also, the value will be increases or decreases amma. The creditor value will be decreases. So this is the concept called as discount allowed or discount received amma. Discount received of rupees 5,000. Of rupees how much ma? 5,000. In this situation also again the creditor value will be increases or decreases amma? Decreases. So Bharat CM mein hi ma. Okay na? Decreases. So and then I will explain the bills payable concept at that point of time of bills of exchange in a very clear manner. So because of bills payable also creditor value will be decreases. Why sir? Because if the creditor having a trust on us means he will not draw the bill. If the creditor is not having any trust on us means what he will draw ma? He will draw the bills payable on us. So we have to accept. At that point of time bills payable will be coming to the picture and the creditor value will be decreases. Just name changes, that's all. Okay na? So until now we can understand these 4 transactions. Then after we can see about the bills payable and bills receivable separately. Okay na? So this is the 4th one. Completed ah? PSPK edits 143. Okay. Okay, let us discuss the one by one transactions. So what is the first one ma? Credit purchase of goods. Of rupees 1 lakh. Okay, what are the 2 outcomes will come into the picture ma? So nothing but purchase and creditor. So purchase is an expenditure or income, amma? Expenses. So expenses are going to have which balance, ma? Debit balance. So always we have discussion now. Expenses always increases or decreases, amma? Increases. So what we need to do, ma? Debit. So next coming to the creditor. Who is the creditor? Asset or liability, amma? Liability. So liability will have which balance? Credit balance. Amma, liability created or we are repaying the liability? Created. So liability created means increases or decreases? Increases. So what we need to do, ma? Credit. So what is the journal entry will come into the picture, ma? So nothing but purchases account debited to creditor account. Thank you, Priya. Prithvi. Parthiv, sorry. Purchase account debited to creditor account. Can you see the amount, ma? 1 lakh. What is the second transaction in our example? So after purchasing the goods, what we are doing, ma? We are going to return the goods to the creditor. So this transaction is nothing but purchase returns of rupees 10,000. Okay, what are the two outcomes, ma, here? So purchase returns, to whom we are going to give? We are going to give the creditor. So purchase returns and the creditor. So here we have to be very careful. Before that purchase, we are consider it as expenditure. So purchase returns we can consider now it as income. So income will have which balance, ma? Credit balance. While discussing our basics, we already discussed that always incomes and expenses are increases. So if the credit balance increases, what we need to do? Credit. When coming to the creditor, it is a liability. Liability will have which balance, ma? Credit balance. Now, because of purchase returns, our liability will be increases or decreases, ma? Decreases. So in the before transaction, how much is our liability? 1 lakh is our liability. Now we are going to return 10,000 worth of goods. Our liability will become how much? 90,000. That means our creditor value increasing or decreasing? Decreasing. Our creditor value will be decreases. So if the credit balance decreases, what we need to do, ma? Debit. So can you say the entry? Creditor account debited to purchase account. So the amount is equal to 10,000. While writing the amounts, you have to use the commas. Then only the calculation mistakes will not be happen in the examination. You have to remember that one. So next, what is the third transaction, ma? We are repaying to creditors. So amount paid to creditor of rupees how much ma? 85,000. Then can you say the outcomes ma? The two outcomes are cash and creditor. So here cash is nothing but asset. So asset will have which balance ma? Debit balance. So we have to decide whether it is increasing or decreasing. So we are paying the cash means it is comes in or goes out from the business, goes out from the business. So goes out means decreases. So if the debit balance decreases, what we need to do? Credit. So next one, creditor. Creditor means asset or liability ama? Liability. So liability having which balance ma? Credit balance. So now we have to decide whether it is increasing or decreasing. So in our previous one, what is our creditor liability becomes? Our creditor liability becomes to how much ma? 1 lakh to 90,000. Okay na? Now our opening balance is equal to how much? 90,000. Out of 90,000, how much we have paid? 85,000. So that means the creditor value becomes to how much? 5,000. So that means our creditor value increasing or decreasing? Decreasing. So decreases. So if the credit balance decreases, same side of credit or opposite? Opposite. What we need to do? Debit. Can you see the entry? Creditor account debited to cash account. Completed amma? So creditor account debited to cash account. What is the amount? 85,000 and 85,000. Okay na guys. So next, what is the final transaction in our example ma? So nothing but fourth one. Discount received from creditor of rupees how much ma? 5,000. So can you say the two outcomes ma here? Sir, here there is a myth that discount received means we are not receiving cash from the creditor ma. So our liability, whatever the liability is pending, they are going to write it off the complete 5,000. So the two outcomes are discount received. Who is giving the discount received ma? Creditor. We should not take the cash as an outcome. So now discount received means income, expenses, asset, liability ama? It is an income. So increases, sorry, which balance ma? Debit balance. Sorry guys. Income will have which balance ma? Credit balance. Always incomes are increases. If the credit balance increases, what we need to do? Credit. So next one, creditor. Who is the creditor ma? Asset or liability? Liability. So liability will have which balance ma? Credit balance once again. So now in this situation also, our creditor value increases or decreases amma? Decreases. Because the balance we are having how much? 5,000. Now he has he is going to return off that 5,000, our balance will become what ma? 0. So that means decreases. So what we need to do ma? Debit. What is the entry? Creditor account debited to discount received account. How much ma? 5,000 and 5,000. Okay na guys. So next we need to discuss which account ma? Creditor account. So a very important account for which chapters? Skill entry and NPO. Okay. So for that is the reason we are discussing all these entries. So directly also we can prepare the creditor account. We cannot prepare the creditor account. Directly also we can prepare, but only for your understanding I have said. So creditor account will have which balance ma? Creditor will have nothing but liability na. Liability is going to have the credit balance. So if the credit balance increases means which side ma? Credit side. That means if the creditor value increases means we have to record on the credit side. If the creditor value decreases means we have to record on the debit side. So that is only the reason. So here for the assets and liabilities we are going to have what ma? Opening balances and closing balances. So for the credit balance, opening balance will be on the which side ma? Credit side. So what we have to write? By balance. So opening means brought down, closing means carried down. And the closing balance will be on the which side ma? Debit side, because it is showing which balance? Credit balance. So to balance carried on. Okay na? After that, what is the first transaction journal entry ma? The first transaction journal entry is nothing but purchase account debited to creditor account. So that is equal to how much? Purchase account debited to creditor account, how much ma? 1 lakh. But we are not going to write the amounts, just understanding the account, that's all. So creditor account, what happened ma? Debited or credited? Credited. So in the creditor account we have to record on which side? Credit side. So with the name of what ma? Purchases. So by purchases. So here also increases or decreases ma? Increases. That is the reason we are recording on which side? Credit side. And then purchase returns will be on the which side? Debit side, because increases or decreases ma? Decreases. To purchase returns. Account. What is the entry ma? Creditor account debited to purchase returns account. If you are going to pay the amount to the creditor means value increases or decreases ma? Decreases. So decreases means which side we need to record? We need to record on debit side with the name of to cash or bank account. Okay na? What is the next journal entry ma? Discount received or allowed ma? Received. So the entry we are going to get creditor account debited to discount received account. Which side we need to record that one ma? Debit side, because the value increases or decreases. The value is going to decreases. So to discount received account. And then what are the remaining items we are going to have ma? Bills payable. So for the purpose of bills payable also value will be decreases. So please remember to bills payable account. And if it is dishonor means which side we have to record ma? The credit side by bills payable, the bracket dishonor. If it is honor means will not be appear in the creditor account. Okay na? Dishonor means at that situation only it will going to appear. So this is how we are closing this particular account. Okay na? Generally what will be the closing balance ma? Balancing figure. So the balancing figure is equal to closing balance in general. Okay guys, this is how we are completing. You are going to understand these bills payable and here bills payable in which chapter? Bills of exchange chapters. Even though if you know means, so it is fine. So this is how we are completing how many accounts totally? Two types of accounts. So one is a debtor account, another one is a creditor account. So next we are going to see asset account. So next third one. Asset account. So in the name itself asset account na, which balance it will show ma? It is going to show the pairing. Okay. So the name itself asset account na, which balance ma? Debit balance. So for the debit balance, opening balance will be on the which side ma? Debit side. Closing balance will be on the which side ma? Credit side. Already we know. If the debit balance increases, debit. And if the debit balance decreases, credit. Opening balance on debit side. Closing balance on credit side. So can I prepare account directly? First I will write the transactions what are going to come. I will prepare the account directly because you are going to understand the concept very well. So can you identify what are the transactions are going to come in this particular account? First, as usual, what ma? Opening balance. Next one, purchase of asset. Okay na? Purchase of asset. Next one ma? Depreciation of asset. Purchase of asset and depreciation of asset. Next one, sale of asset. Next, if you sell, either we are going to get profit or either we are going to get the loss. So profit on sale of asset. Next one, or loss on sale of asset. Next one ma, closing balance. Sometimes there will be a credit purchase and a cash purchase also. We can write, okay, we can discuss some other time, no problem. So just these points are enough. So let us imagine this is a which type of purchase ma? Cash purchase of asset. Okay, these points we need to understand. So we are not going to see the entries directly, we are going to see what ma? We are going to prepare the account. You know, as usual, in which situations the asset value will be increases, you have to say. Easily we can identify, yes or no. So at the time of purchases, the asset value will be increases. So if the asset value increases means which side? Increases means debit side, decreases means credit side. Okay. So because of purchase of asset, the value will be increases, and we have to record on debit side. Next one, because of depreciation, the value will be decreases, you know. So what we need to write ma? So decreases means we have to record on the credit side with the name of depreciation. Here with the name of cash, or in the case of credit purchase means what we have to do? Credit our name we are going to write. And next is sale. If we sell the asset, the value decreases or increases? Decreases, because comes in the goes out. Goes out. So sale of asset decreases, we have to record on which side ma? Credit side. Okay na? Next one. Now we have to understand profit on sale of asset and loss on sale of asset. So generally, if you imagine a particular account of, imagine this is a which type of account means asset account. Which account ma? Asset account. If you purchase, which side we are going to record? We have to record on the debit side. For example, 1000 rupees the asset value. So the same asset we are going to sell at, imagine, 1500 rupees. The same asset we are going to sell how much ma? 1500 rupees. If you sell means the value comes in or goes out ma? Goes out, the value will be increases or decreases? Decreases. If the asset increases means debit side, decreases means credit side, opposite. Without the entry also we can we can prepare the what ma? Asset account or types of any type of account. Now, can you identify whether we are getting a profit or loss? Profit. Yes or no ma? Because the cost of asset is equal to how much? 1000. The sale value of asset is equal to how much ma? 1500. So we are getting a gain na? So which side the balancing figure is there? Debit side. What is the meaning of this 500 ma? Profit on sale of asset. So we have to transfer this one to profit and loss account. In the P&L account, which side we are going to pass ma? Here in this account is debit side, means in the P&L account which side we need to record ma? Credit side, by profit on sale of asset is equal to how much ma? 500 rupees. So like that we have to prepare this one. Are you getting the point or not? If it is a loss situation means opposite will come. Okay na? So we can understand. That means you try to understand that profit will be on which side ma? Debit side of asset account and credit side of P&L account. Loss will be on which side ma? Credit side of asset account and debit side of P&L account. So you have to remember those points. In remaining points we can understand easily. So I am going to prepare directly what ma? Asset account. So increases means debit side, decreases means credit side, because this account will show debit balance. If any account is showing the debit balance, the opening balance will be on debit side. Can I write 2 balance brought down ma? So 2 balance brought down. And the closing balance will be on the which side ma? Credit side, because this particular account is showing which balance? Debit balance. So by balance carried on. Okay, next ma. So what is the next transaction ma? Purchase of asset or sale of asset? Purchase of asset. If the purchase of asset come into the picture, so increases or decreases ma? Increases because comes in or goes out? Comes in. Which side we have to record ma? Debit side. So with the name of what we have to record? To cash or bank or creditor. Can I write like this ma? To cash or bank or creditor. If it is a cash purchase means cash or bank. If it is a credit purchase means creditor. Next one. So sale of asset, depreciation ma. So through the depreciation the asset value increasing or decreasing amma. So the asset value is going to decrease. Which side we have to record? Credit side with the name of depreciation. So by depreciation. By depreciation account. So next what we are going to do ma? Purchase completed, depreciation completed, opening and closing also completed. So next what we are going to do? Sale. Sale also. Same side or opposite side amma? Opposite side. Because so purchase record on the debit side means sale will be record on which side ma? Credit side, because the value decreasing. So by we can write what ma? Cash or bank or debtor or creditor amma now? Debtor. Okay na? And already we have discussed either we may get a profit or either we may get a loss. So profit means which side of this particular account? Profit means what ma? Debit is more or credit is more? Credit side will be more. Yes or no? Purchase happening, let us imagine 10,000. You are going to sell at how much ma? 15,000. That means the balance of 5,000 will be coming to the picture on which side ma? Debit side. So that profit we have to transfer to P&L account. So to profit and loss account, in bracket you can write profit on sale of asset. Profit on sale of asset. Now the profit on the debit side means loss will be same or opposite amma? Opposite. Now we can imagine like this. Our asset value is equal to how much ma? 15,000 we have purchased. But we are going to sell at 10,000. Now the balancing figure will come on which side ma? Credit side. So by P&L account, in bracket what you can write ma? Loss on sale of asset. So next one. So generally what will be the closing balancing figure ma? Closing balance will be the balancing figure. Or if they have given the balancing figure, we have to identify either depreciation, either sale value, profit or loss on sale of asset, or purchase also we can identify. So this is how we are completing which type of account ma? Asset account also. And next will be the very interesting topic about income account and expenditure account. Okay na? Till now I think all the people are going to know about this debtor account, creditor account and asset account. But most of the people don't know which account ma? Expenditure account and income account. So stay tuned, a very interesting topic coming to the picture. Completed amma this one. So in the income account, not only now we are going to discuss firstly expenditure account. So this is the fourth type of account. expenditure account. So here expenditure will show which balance ma? Will show the debit balance, but opening balance and closing balance will be there or will not be there? Opening balance will not be there, but the closing will be there, but we are going to transfer to P&L account. We are not going to write a balance carried on. Okay, ma? So in the place of balance carried on, we have to use the word called as P&L account straight away. Okay, na? So normally write which balance it is showing ma? Debit balance. If it is increases, debit. If it is decreases, credit. Okay, just for your understanding I am writing. And now here expenditure, in the expenditure account, what are the transaction will be there, sir? Means 3 type of transactions will be there ma. What are the transactions will be there ma? 3 types. What are the 3 types of transactions? Means expenses paid, outstanding expenses, and next one ma, prepaid expenses. So already we have discussed what is the meaning of outstanding expenses and what is the meaning of prepaid expenses. Yes or no ma? Can you say the entry for the outstanding expenses? Expenditure account debited to outstanding expenses account. Can you see the entry for the prepaid expenses? Prepaid expenses account debited to cash or bank account. Already we have seen. Okay na? So okay, you 4 to 5 lines space and then start the preparation of account easily. Can you say the expenditure paid entry ma? Expenses account debited to cash or bank account. Okay, I think you know this one, so I am going to write once again. Expenses account debited to outstanding expenses account. What is the entry for this one? Prepaid expenses account debited to cash or bank account. Prepaid expenses account debited to cash or bank account. You know all the 3 entries. Now easily you can prepare this account or not ma? Yes, but there is a little bit 2 points are there. Okay, I will explain, no problem. So directly prepare the, no need to give any type of spaces. So directly prepare which account ma? Expenses account. Which balance it is ma? Debit balance. So for the debit balance, opening balance will be on the debit side, but there will be no opening balance for the expenditure account. If the expenses increases, which side ma? Debit side. If the expenditure decreases, means which side ma? Credit side, because it is showing which type of balance? Debit balance. So there is no opening balance. I am not going to write. Opening balance will be there or will not be there ma? Will not be there for the expenses account. So 2, what are the 3 items are going to come? Expenses paid, outstanding expenses and prepaid. What is the entry for the expenses paid, ma? Expenses account debited to cash or bank account. That means increasing or decreasing, ma? Increasing. So to cash or bank account. Cash or bank account. Next, outstanding expenses. What is the entry for the outstanding expenses? Expenses account debited to outstanding expenses account. So once again, that means increasing the expenses or decreasing the expenses? Increasing the expenses. Even though we are not receiving the current, we are not going to pay the expenditure in the current year, but we have to recognize or no need to recognize? We have to recognize as per which concept, ma? As per accrual concept. So remember, we can discuss again the concepts on another day. So next one, what we are going to get? Two outstanding by outstanding, amma. Two outstanding expenses. And next, what is the entry for the prepaid? Prepaid expenses account debited to cash or bank account. So here, because of this prepaid expenses, whether it is related to current year or not related to current year, not related to current year, the expenses value will be decreases. The expenses value will be decreases. So first what we are going to do means, so first we are going to write all the expenses account. Okay na? So yesterday we have taken one example. What is that example, ma? Our current year rent is only 1,20,000, but we have paid how much, ma? 1,40,000. For all the 1,40,000, we are going to record the entries. Like which entries, ma? Expenses account debited to cash, expenses account debited to cash, like that we have recorded. What is the total expenditure we have recorded, ma? Expenses account debited to cash account, that is equal to how much, ma? 1,40,000 and 1,40,000 you have recorded, ma. At last, at the year end, you have identified that what happened, ma? Our current year expenses is only how much? 1,20,000, but we have recorded how much, ma? 1,40,000 as an expenses of the current year. So that means how much expenditure we need to reduce? 20,000. So 20,000 reduces means the debit balance or credit balance of my expenses? Debit balance. So in order to decrease the debit balance, what we need to do now? Credit. So the ultimate entry we are going to get what means? Prepaid expenses account debited to expenses account. What is the ultimate account we are going to get, ma? Ultimate entry, prepaid expenses account debited to expenses account. So that is the conclusion I am going to give. So normally this thing only we have to follow. In general, what they will say for the prepaid expenses account debited to cash, for only or on your, for your understanding, that's all. But what is going to happen actually, ma? They don't know whether it is a prepaid or a current year or next year. They are go on paying the payments. At the last, they are identified that what, ma? Some amount is a prepaid. They are going to reduce the expenses and they are transferring to which account? Prepaid expenses. So which side we have to record, ma? Credit side, by the name called as by prepaid expenses account. Okay na? So the closing balance generally we are going to get on which side, ma? The debit balance, closing balance will be on the credit side, but we should not use by balance carried on. We have to use what, ma? By P&L account. So in the P&L account, which side we have to pass, ma? We have to record on the debit side. But there is another type, ma. Sometimes, so can you say this outstanding expenses belongs to which year, ma? This outstanding expenses belongs to current year. We have pay, this happened, okay na, all the things are happened which year ma, current year, okay na, they did not given any previous year information, yes or no. So that means we can understand here like that, this outstanding expenditure related to current year, related to what ma, current year. So what is the meaning of prepaid expenses ma? Current year prepaid expenses belongs to which year? Next year. That is the reason what we are doing, we are reducing, okay na. So next year belongs to next year. Sometimes they are going to give the previous year information also. They are going to give what ma, previous year. So what I am saying is, outstanding expenses, they are going to divide in two parts. Up to final accounts and single entry, which type is sufficient? Up to here is sufficient. They are not going to provide you what ma, previous year information. For discussion of NPO point of view, they are going to give what ma, previous year information also. So that is the reason, till now we have seen the current year information. Current year outstanding expenses we have recorded on which side? Debit side. Why ma? What is the reason? Because of this current year outstanding expenses, our expenditure going to increase or decrease? Increases. Our expenses going to increases. Even though you are paid or not paid, we have to recognize the expenses as per which concept ma? Accrual concept. But if they given the previous year outstanding expenses, they given what ma? Previous year outstanding expenses. So what is the meaning of this one ma? This expenses belongs to previous era, belongs to current era. Belongs to previous year means we should consider in the current era, we should not consider in the current era. We should not consider means we have to increase or we have to decrease? We have to decrease. We have to decrease means what we need to do? Credit. So that is the reason I am not directly discussing the previous year directly, okay na. So if it is a current year outstanding means what we are going to do ma? Increases. That is the reason we are recording on which side? Debit side. If it is a previous year outstanding means debit side or credit side amma? Credit side. By outstanding expenses account, which year ma? Previous year or current year? Previous year. So please remember, very very important, previous year belongs to previous year. Are you getting the point? So next one, in the same way they will give information what ma? Prepaid expenses of previous year, prepaid expenses of current year. So now this is very important. So prepaid expenses, they will give current year prepaid and previous year prepaid, okay ma. Amma current year prepaid means it is belongs to which year? Current year prepaid means it is belongs to next year. So next year things we have to consider or we should not consider? So that is the reason what we need to do? Decrease. So decreases means which side ma? Credit side. Are you getting the point? So this thing already done or not done? Not done. Sorry, already done. We have done this one. So next, see the previous year ma. They have given the previous year prepaid expenses. Belongs to which year ma? Current year. So what we need to do? Consider or not consider? Consider means increases or decreases ma? Increases means which side we have to write? Debit side. So now what we have to write ma? Two prepaid expenses, okay ma, belongs to which year ma? Current year. Previous year we are going to write here, okay na? You can keep here also, undoubtedly you may get the confusion. Current year, okay na ma? So this is the overall account of expenses. Guys, are you getting the point or not? First, what we have taken? So Just simply expenses or the expenditure account. How many transactions will come into the picture, ma? 3 transactions: expenses paid, outstanding expenses, and prepaid expenses. Expenses paid, what is the entry? Expenses account debited to cash or bank account. I will show you, no problem. You can write expenses account debited to cash or bank account. So to cash or bank by cash or bank, ma? To cash or bank, easily it is related to current year. So expenditure value will be increases. Outstanding expenditure also related to current year, related to next year, ma? Related to current year. Current year outstanding belongs to current year. Previous year outstanding belongs to previous year. So the current year outstanding record on the debit side, previous year outstanding record on the credit side, because it has to be increases, it has to be decreases. When coming to the prepaid, is not like that, ma. The current year prepaid belongs to which year? Next year. That is the reason we have to decrease now. That is the reason the current year prepaid expenses we are decreasing, and the previous year prepaid expenses we are going to add. So increases means which side, ma? Debit side. Decreases means which side, ma? Credit side. So increase means add a minus sum. Increase means add. Decrease means minus. Yes. So these are the things you have to be remember. If you understand the expenditure account easily, you are going to understand what, ma? Income account. So please take a note of it. So current year belongs to which year, ma? Current year only. Previous year belongs to which year? Previous year in the case of outstanding. Okay, ma? So you can prepare the statement type also. What you can prepare, ma? The same account, most of the people are going to prepare in a statement format, but we are remembering through which type, ma? Account only. So if you want, you can prepare the income like expenditure statement also. So statement of expenditure. Particulars, amount rupees. So nothing but the account only we are preparing in the form of statement. What we are going to do means, we will take the base of expenses paid. Okay, ma? Expenses paid during the current year. For this one, what we are going to do, ma? Outstanding expenditure of the current year will be included in this expenditure or will not be included? Will not be included. So this is expenses paid or not paid? Paid during the current year. Okay, na? That means outstanding expenditure of the current year included or not included? not included. That means we have to add or we have to less. We have to add. Okay now. So see this account ma. So this is called as expenses paid during the current year. Okay now. In these expenses, the outstanding expenditure will be there or will not be there? Will not be there. So that is the reason we are going to do what? Add. So debit side means we have to do what ma? All add. Credit side means we have to do what ma? Less. The balance amount only we are transferring to which account ma? P&L account. Are you getting the point or not? So nothing but this is the amount generally will be appeared in receipts and payments account. Receipts and payments account. The NPO chapter we are going to prepare two types of accounts now. Which are the two types of accounts? Receipts and payments account and income and expenditure account. If you see here itself, I will say try to remember here cash and bank is nothing but receipts and payments account. Okay na guys? And P&L account is nothing but what ma? Income and expenditure account. Are you getting the point? If they are given that this balance, we are going to identify this one. They will give this balance, we are going to identify this one. So that is the same thing I am going to write in a which format ma? Statement also. If you want, you can remember either in the two ways. You know? So what I am saying, this is nothing but what ma? Receipts and payments account. Now understand the situation. What I am asking ma? Outstanding expenditure of the current year. Outstanding expenditure of the current year will be included in this expenses or will not be included in this expenses or will not be included, but even though that is related to which year ma? Current year. So that is the reason. So simply ma, we are going to receipts and payments account to what? Income and expenditure account. So income and expenditure account will follow what ma? Accrual basis. Income and expenditure account will follow accrual basis. What is the meaning of accrual basis ma? Means expenses related to current year we have to consider, you know, even though even it is paid or not paid. You know, expenses related to current year we have to consider, we should not consider. We have to consider even though paid or not paid. What the receipts and payments account will follow? Cash basis. So what is the meaning of cash basis ma? Expenditure paid only we have to consider, even though it is not even though it is related to current year or not related to current year. Are you getting the point or not? Okay now. So what the cash basis will discuss ma? Cash basis will discuss expenses paid during the current year will be considered. Even though even is related to current year or next year or previous year. But here involvement of cash should be there or should not be there? If it is involvement of cash is there means we will consider directly. But as per accrual concept, even though involvement of cash is there or not there, but here should be what ma? Here should be related to current year only. But here is necessary, here is not necessary. Here is not necessary, cash is necessary. So next year or previous year or current year, it is not necessary for me. If it is belongs to involvement of cash is there means we are going to consider. So see this one, the total expenses paid during the current year. That means here the prepaid expenses will be there or will not be there. Prepaid expenses also will be there. Yes or no? So next one, outstanding expenses will be there or will not be there? Will not be there. But previous year outstanding expenditure will be there. Okay, nama. But the previous year prepaid expenses will be there. Previous year prepaid expenses will not be there. Sir, here what happened means in the current year whatever the expenses we have paid in total will be appear here. Okay, na current year. In the current year we are having the three types: expenses paid, outstanding expenses, and prepaid expenses. Undoubtedly expenses paid will be there or will not be there? Yes, will not be there. We can consider we cannot consider we can consider as per accrual basis. Then no, we have to disturb anything we should not disturb. We should not disturb. But here, unless come to the prepaid expenses of the current year, prepaid expenses will be there or will not be there? Yes, will be there. Expenses paid means including the prepaid expenses. So that is the reason we have to add back what? Outstanding expenses of the current year, and we have to reduce what? Prepaid expenses of the current year. When coming to the outstanding expenses of the previous year, will be there or will not be there? Yes, there may be a chances. The outstanding expenses of the previous year can be come in the current year. So that is the reason already included here now. What we have to do? Reduce. But here in this amount, which item will not be available? Prepaid expenses of the previous year will not be available, because prepaid expense of the previous year they have received in the previous year itself. But here the expenses they have paid in the previous year itself. Here the expenditure we have paid in the previous year, paid in the current year, paid in the current year. So there may be no chance of involvement of which one? Prepaid expenses here. So that is the reason we have to add back. We have to add back. So let me say, outstanding expenses of the current year will be there or will not be there? Will not be there. But we have to consider we should not consider we have to consider. So add back outstanding expenses of current year. Okay, Rama. So here in this amount there may be a chance of previous year outstanding, there may be no chance of previous year outstanding. There may be a chance of previous year outstanding, because previous year outstanding means previous year received or not received. The previous year is not received, there may be a chance of receipt of current year. So that is the reason, if it is available means what we have to do? Minus outstanding expenses of previous year. Because we should consider we should not consider? We should not consider. Only current year items we have to consider. Previous year items we should not consider. Or next year items we should not consider, because we are following what? Accrual basis. So next comes to the prepaid point. Okay. Here which prepaid will be included? Current year prepaid previous year prepaid included? Current year prepaid will be available here, but the previous year prepaid will not be available, because previous year prepaid means they have paid in the previous year, they have paid in the current year, they have paid in the previous year. But here expenditure paid in the current year, expenditure paid in the previous year, expenditure paid in the current year. So that is the reason. So here we are going to reduce the prepaid expenses paid in current year. Okay, na? Next, what we have to add? Prepaid expenses paid in previous year will be included or will not be included? Will not be included, but we have to consider we should not consider we have to consider. That is the reason we are going to add back. Then what we are going to get, we are going to get the closing balance, nothing but P&L account or income and expenditure account. So this is how we have created the account also. Add means which side, debit side. Okay now, this also will be present on which side? Debit side, because what is the entry? Expenses account debited to cash or bank. So less means credit side. Yes or no? This one also credit side, and this is a debit side. So totally this one only we have done here also. Okay nama, which one is simple? You can follow that one, but you have to get either one of these two types. Okay na. Completed. Okay, on your own. Right. Reception payments. Okay, next we are trying to concentrate the income account. If the income account is completed, you can go. Okay now. So in the same way, what we have discussed in the expenses account. Fifth account na. Fifth type of account. Income account. Income account will show which balance, credit balance. So credit balance, if the credit balance increases, what we need to do? We have to record on the credit side. If the credit balance decreases, what we need to do? We have to record on the debit side. Okay, now. So same like expenses account, here also we are going to have how many more? 3 items. What are the 3 items? Income received, next one, income receivable, next one, income received in advance. Okay, Nama. So what is the entry for the income received? Cash or bank account debited to income account. Yes or no? What is the entry for the income receivable? Income receivable account debited to account debited to income account. Now coming to the income received in advance entry. So this income received in advance, they don't know whether the income belongs to current year or next year, and directly they are going to pass this entry. So which entry they have passed initially? Cash or bank account debited to income account. 1 lakh only they have to record this one. For 3 lakhs they are recording the same entry. That means how much income we have to decrease? 2 lakhs income. Decreases means which side we have to transfer? Debit side. So what is the entry coming to the picture? Income account debited to income received in advance account. Income account debited to income received in advance. So now easily we can prepare a hard number easily. So this is a this receivable belongs to current year or next year? Current year. So this was income receivable in the current year belongs to the current year. Income received in advance happened in current year but belongs to which year? Belongs to next year. Income received in advance belongs to next year. What we have to do? This one we have to add, this one we have to add, and this one we have to reduce. If the income receivable during the previous year means we have to less. Income receivable of the current year means we have to add. Income receivable of the previous year means we have to less. Income received in advance in the previous year means we have to add back. So those items first we are going to put these items, and then after we can collect those items also. So income account will have which balance ma? Credit balance. Credit balance. The credit balance increases which side ma? Credit side. Decreases means which side ma? Debit side. Now, so income received, what is the entry? Cash or bank account debited to income account. Which side ma? Credit side. By cash or bank account. So next one. So income receivable. What is the entry for the income receivable ma? Income receivable account debited to income account. Again, which side we have to record? Credit side only. By income receivable account. When coming to the income received in advance, so income received in advance is available on income received, yes or no ma? So here which side ma? Credit side. In order to decrease this one, which side we have to record? Debit side with the name of to income received in advance account. Okay, now these are the two things are happened in the current era, happened in the previous era ma. These are the two things that happened in the current era, happened in the previous era, happened in the current year. So that is the reason I am putting what ma? Current year and current year. Okay na? If they given the previous year data, we have to write the same side or opposite side? Opposite side, that's all. There is no difference. So income receivable record on which side? Credit side. Now we have to record the previous year income receivable on which side? Debit side. Because we should consider or we should not consider? We should not consider. So income receivable account of which year ma? Previous year. So this also, this amount is also available on which amount ma? Will be available on in this amount. This income received, we have to reduce this one. So that is the reason we are recording on the which side ma? Debit side. Amma current year income received in advance is recorded on which side ma? Credit side, debit side. So but previous year income received in advance will be recorded on which side? Credit side. So next one. By income received in advance of which year ma? Previous year. Because there is no scope, the amount will be available in this amount. No, will not be available. But we have to consider because it is belongs to which year ma? It is belongs to current year. So we have to see related to which year or not. If it is related to current year means, so we have to add na. That is the reason we are recording on the credit side. If it is related to either next year or either previous year, what we have to do ma? We have to reduce. If the reduce items are available on which side ma? Debit items, debit side. Increase items will be available on which side ma? Credit side, because it is showing which balance ma? Credit balance. So now the closing balance will be transferred to. The closing balance will be transferred to which side ma? Will be transferred to the P&L account. The closing balance will be available on which side? Debit side, because this particular account is showing which balance? Credit balance. For the credit balance, closing balance will be on the debit side. For the debit balance, closing balance will be on the credit side. So this is how we are completing the Okay, Nama. So easily we are writing it off. If you want to prepare, you can prepare the statement also. So this is the starting point. So what are the things we need to do, ma? We have to add this one. We have to add this one also. Which things we have to reduce, ma? These two things we have to reduce. So this is the homework for you. You have to prepare the statement while coming to the next class. I think you got the clear picture about all the 5 accounts. What are the 5 accounts, ma? Debtor account, creditor account, asset account, expenditure account, and income account. So please be careful if they given the previous year information. Okay, na? If the current year information they have given means we know the entries, easily we can pass. Okay, na? Can you say the ultimate outstanding expenses entry, ma? Outstanding expenses account debited to outstanding. Next, prepaid expenses entry, what, ma? Prepaid expenses account debited to expenses account. Expenses account. When coming to the income received in advance, what is the entry? Income received in advance is a liability. So income account debited to income received in advance. So that is the ultimate conclusion I have given. So these are the core basics. In the next class we are going to discuss about provision. Provision for bad debts. So what is the meaning of provision? What is the meaning of reserve? So next class we are going to put the provision account on those items. So because from there onwards we are going to get how many marks, ma? 4 to 5 marks from the provision for bad debts. So in the next class I am directly going to start some of the questions also. Sir, these are simply I am saying are useful for our examination. Useful for our examination. How many chapters we are going to cover in this basics? The main 2 concepts we are going to cover. And undoubtedly you can get a more clarity about the provision means you can easily solve the final accounts. You know? So this is how we are completing. So we have completely discussed about the modern approach, and we have completely discussed about the special transactions like outstanding, paid, income received in advance, and we have completely discussed about the types of accounts. Once again I am saying accounting paper will be lengthy or difficult. Lengthy, you have to manage your time by way of concentrating on the basics, because basics will be completed within less time when compared to the big question. That is my target. Thank you. Have a nice day. Bye bye.